Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. So the Nasdaq has had this really good run for us that has gone up from sort of strength to strength. Now we can see with the likes of this that it's in a little bit of a really good run. Okay, so it's in a really good run. And what we have seen over the last couple of days is we've had a pullback. So we've had this retracement that we have wanted. So we've wanted this retracement, and it's now come back in the form of back to here. Now I understand that the market is not open yet, so it's now 10 o'clock, so the market hasn't opened yet. But we've had a pretty big sell-off over the last 1, 2, 3, 4 days. So the buyers have let the sellers take over here. There's no resistance from the buyers here. Now we are getting into sort of areas of things that we sort of want to take a little bit of into consideration. So if we have a look at the likes of, we have two levels. We have this one and we have this one. Now we can see here that we have a bounce right there. And we can also see that we have another rejection here. So what this is telling us is that we have a sort of a zone here between these. So we haven't got a level per se, but we have a buying zone. Now the question we have to ask ourselves is this zone strong enough for this to turn around? And it's two very simple answers as either yes it is or no it's not. And that's it in a nutshell. We have two clear questions we need answered. Is it strong enough for a rejection, yes or no? Now people will look at that. We wanted it to come back down to this level. So we are back in that zone now. If we zoom in here and have a look at what's going on here, we can see that we have had this big selling day yesterday. Look, we've had this bearish bar yesterday. Look, it dropped there. So if we get the ruler, well, how much of a percentage drop was that yesterday? From the open to the close of the bar was a 2.4, down to the very low of that bar was 2.8. So we almost had a 3% movement yesterday, which is a pretty big bar. So you can see there's a pretty big bar compared to most of these here. So it's telling us the last 2 days, the sellers have taken complete control of this market. Now, what we can see here now is we can see the pre-market or the futures market. So it's not half two yet, so the market is not open. So this means that this is the future market. So this is a little market that you or I don't have access to. So it's called the pre-market, and that's what's happening there. Now we can trade this on the likes of the Nasdaq, the S&P, and the Dow, but we can trade this with the underlying stock. We don't have access to that, and that's where this is all coming from. But if we look at the futures market, we have at this present moment in time as 10:38, we have a low test bar. So that is telling us in the pre-market that, or the post-market for this instance, the post-market, the market went down lower, and then buyers started to come in and started to push the market back up. So it's telling us there's a little bit of indecision there. Now, again, we cannot make an assumption on today based on the post-market. The pre-market hasn't even set up yet. Okay, so what I mean by post and pre-market is the post-market means that when the market is finished, there's a half an hour where institutional traders and some platforms give you access to put in orders and trade after the market is closed. And then pre-market is that there's a half an hour before the market opens that traders can access this and it depends on what broker you're using and how much liquidity you have. So at this present moment, the post had to come down and it pushed it back up. Now it gives us a little indication of what could happen today. Like I said, we can never take this guarantee that this is what's going to happen, but it's given us a little indication that the sellers have tried to push it down, and there's actually a little bit of resistance from buyers. So buyers are interested in this area. And why they're interested in this area is because we have that level there, and we also have that level there. And that's why. And we are slap bang in the middle of that. And that's why we have, this sort of today's bar. As I it's not even today's bar yet, this post-market bar that looks like it's a low test bar. Now, for me, I will not be trading this till this bar is finished. Till the 9 o'clock at night, this is when I'll be looking to place this trade, once this bar is finished. And if this bar finishes like this for me is a really, really good time to potentially enter the market. It's a really, really good time for me to be looking at this. It's a really, really good time for me to eventually be looking at this and go, yeah, this is definitely a place where I want to be in the market. And if this was 9 o'clock at night and was finished, this is how I'd be looking at this. My entry would be above that bar, and my stop loss would be below that level. The bar is there. Now, you could put it below the bar and have a really good risk to reward. But what may happen is you may get triggered in and triggered out very quickly. Okay? So what may happen if you do that is the bar opens here, it goes up, comes down, triggers you out, and then goes back up again and finishes there, which means then that would be more or less a doji bar in the middle of the day. Okay, and you've been triggered in and triggered out. So that's the downside of potentially doing the likes of that. So for me, I want to put my stop loss in a pretty safe place, and to me, below that horizontal is a pretty safe place. Because for me, if it breaks this horizontal, it's then heading down to here. That's the next level. So that's for me where the next place is going. And to give you a little understanding of where these two levels are, look, there's 1, 2, 3 touches on this top level. And then we have 1, 2, 3, 4, 5 touches on this lower level. Now, yes, I understand that this was all sort of in one area. And this one looks better because it had three really clean rejections. So there bounced up, there bounced up, and there bounced down. So there's really clear rejections on this upper one, but we can't disregard it. So we have those two areas there. So for me, this is what I'm looking for. This is what I drew in before. I wanted to come back to here and then bounce up. So this is not a trade I'm looking to do on the daily right now. Why? Because the trade has not, the bar has not finished yet. And I need the bar to finish to give me a picture on what sentiment is in the market. Because at the minute, we've had 1, 2, 3 pretty big selling days. So there's more sellers in the market at this particular point. The only question is are the buyers going to jump in here or not? So I'm going to leave that there just so have a little marker of how it's going to sort of play out if we left that there. I'm going to pop that up to a 3-to-1 as normal. And if we look at this, we have a 3-to-1 before that level of resistance there. Look, bounce, bounce, bounce. Okay, which is pretty cool. The only negative is that the 3-to-1 is outside this high. But again, we can see if the buyers take control of this market, the buyers don't really care about the highs, they're taking them out. So let's keep an eye on this. So this is something of interest at 9 o'clock tonight or 9:30 tonight when the market is closed. That is of interest then, but it's not of interest at this present moment in time. But it will sort of indicate, it gives us a slight little indication of what's going to happen today. If we look at the S&P, absolutely identical. Only the S&P has come back to this level 1, 2, 3 and bounce. So it's a much clearer level here on the S&P. It's come back and it's an identical trade. I would also like to have my stop loss below here. Because the worst thing I want to be is stopped out of this trade because I was too tight. I was too aggressive. So that's how I would do it. But again, if you want to be really aggressive, once that bar is finished, now remember, this bar has to be finished before we do this. But I would personally have my stop loss underneath there. And then this would be pretty much like a limit order, and we're expecting this to continue going up. And then the same with the Dow. Now the Dow has actually dropped below that level. So 1, 2, 3. So it's dropped below that level. So this for me it's not a setup. So for me, it's not a setup. Now remember, we wanted to pull back this level. It actually closed below that level. So it's not identical. It's not exactly what we wanted. It's broken down below that level, and it's there at the present moment. So it's not something that I'm looking to take right now. Because anyone who has traded with me before, I needed to bounce off a support level. I need to have a floor. I need to have something for it to bounce off of. And at the moment, we don't have that. Yes, we did have that trend line up here, but that was the thing with these trend lines, with the wicks. It's so subjective. It's not something that we were looking at trading. German DAX. So the German DAX, we talked about this short off this trend line. This one was a much better trend line than the one on the likes of the S&P or the Dow. Came back, natural edge. It hit this ceiling. I believe it hit one of the exponential moving averages as well, if my memory serves me correct. And look, drop down. We wanted to be out at the market before this level. And look, it smashed through that level. It went down to a 3.6 to 1. So we would have got 2.2 to 1 out of it. So well done, anyone that took that trade. Good trading. Well done. Keep up the good work. French CAC. Look, we almost got stopped out. And look, we're still in this trade right now. The question is now, do we expect this to continue going? From almost being stopped out. And that's the thing with leaving a little bit of a buffer on the top of these, leaving a little bit of room for this to go up a little bit higher, giving your trade some breathing rooms, because sometimes you will be completely wrong, but other times you'll be absolutely perfect, bang on the money, and look what happens. We didn't get triggered in by, or didn't get stopped out by the skin of our teeth. And look what's happened. It's now gone into our favor. And at this present moment, you're 1.3 up. Question is do we expect this to continue going? Are we happy now to jump out of this? Are we happy to part close the position? Are we happy to start moving our stop loss higher? So on and so forth. So these are all things that you need to do with your trade management. What was your trading rules for getting into this? Was your take profit just slightly inside of that level? Do you believe the Nasdaq is going to turn? So if the Nasdaq turns, does that mean the European markets are going to turn? So they're all questions you need to have the answers to before you start messing with your trade. UK 100. We wanted this to bounce at this level, which it did. But the problem was there was no trade set up there because we had 1, 2, 3, 4, 5 days moving sideways. So you probably would have been triggered in and triggered out. So want it to come back down to this purple level. And if it comes back to this purple level, I will be looking to have a buy signal on this. China 50. And again, China looks like it's going to pop down. Their sort of left shoulder, head, right shoulder. Looks like it's going to pop down here, sort of to the neckline. So let's have a see how this goes. This is not something I'm looking to trade at the moment. It's not something I'm looking to trade. It's not something I'm looking to play around with. So for me, it's just stay away from it at the moment. So US oil. So oil is one of these ones that for me, it is, I went through it on the Sunday webinar. We're looking at these phase ones here. If I get a trend line and I look at these phase ones, so there's the high to the low. I go from there to there, from there to there, there to there, there to there, and there to there. So I'm now going to just pull these out and just put them all beside each other so you guys can see them up. So I'm going to use the top of that line there. I'm assuming everyone sees the point I'm making here. If you don't, this is a visual representation to what I'm seeing here. Bar this one here, they're all getting shorter, aren't they? This is the anomaly, this one here. This one's the anomaly. If we look at the rest of those, they're all getting shorter. It's like a triangle sort of coming, and we're expecting a breakout either to the upside or downside, one of them. Okay, but it's telling me that it's the sellers are running out of steam here. We've come back into this area here, and it hasn't done a whole lot. It's like it's waiting on something. It's like it's waiting on something. So that means for me, then this is not a trade that I'm looking to trade. Why? Because this could bounce the upside as quick as this could go down to the downside. That's the problem here. We have levels sitting underneath it, and we have that trend line above it. So it's not something that I'm happy to be trading right now. So for me, it's sort of stay away from it. It's not something massively jumping out. Let's put those back. Now I understand. So you guys may go, well, Henry, that last one there was shouldn't have used that. We should have had a phase one, phase two, phase one, but that's 2 bars going backwards. So I need 3. So for me, I'm taking on whole phase one there. But again, this is not something I'm looking at. We talked about this on the 4 hour, on the smaller time frame. We talked about this here and this inside bar taking the short. Remember, we put a little bit of a buffer on the top of this because if you didn't, you would have been stopped out here. It went down to a 1-to-1, and now look, it's turned around, and there's a high probability that you will get stopped out in this one. So at the present moment, this is not something that I'll be trading. It's not something I'll be looking at. Natural gas, look, did exactly the opposite to what we expected. So we've hit this ceiling, come down, hit this ceiling, come down, hit this ceiling, come down, hit the ceiling, came down, triggered us in, and went back up. So it's done the exact opposite to what we expected. It's done exact opposite to what it has done historically. We did have a little bit of divergence on that as well. It came down and look, overall smashed through that level. Now, I believe there was some Saudi news that came out, which has popped this up to the upside. And let's see how far this goes now, because this is not something that we can trade. For me, one of two things has to happen. It has to either come back down to this level here or this one down here. One of those two levels for us to be looking at this again. Okay, so it's not something that I'm looking at. It's not something that I have confidence in trading at the moment. So we had the loss there, had the 1% loss. Now leave it alone. Wheat has come down to this floor down here. Look, down onto this floor. It's had a little rejection. But again, with the overall trend, the overall momentum, it's not strong enough for me to be looking to buy this. I need a little bit of cyclicity to the upside. And then if we get that, then we can sort of jump in on it. So if we come down here onto silver, silver has had a really big sell-off, So we've seen this here, it come back to this sort of area and then come the whole way down. Now this is all due to dollar strength. This is nothing to do with silver weakness or gold weakness. This is all to do with dollar strength. And we can see here that dollar was getting weaker. And all of a sudden, it got much stronger here, okay? Now, what I was looking for is this to pull back up to this area, so bounce, retest. Now, is that a strong level? No, it's not. It's just a bounce and retest. So if this is not perfect, if this doesn't give me price action, trend, cyclicity, if it doesn't tick every single box, it is definitely not something I will be taking. It is just one of those trades that's there, but I need to have all the boxes ticked before I will take that. And for this one at the minute, it's not perfect, but I need to have a sort of pullback into this area, then have some sort of a high test bar, a nice little price action bar, and then potentially look to take that short, but it has to be perfect for me to take it. So we talked about this short on gold on one of our Tuesday webinars, and anyone that took that high test bar, look, we were in this sort of buying zone. We were in this sort of buying zone here. We had the body of the candle here, and then we had that little high test or the little wick at the top. We put a little bit extra on the top, so it's better to have it there than that and not need it than want it and not have it. Okay, so almost here got stopped out. You'd be quite nervous. You'd probably have 100 quid. You'd probably in minus 70 quid at that stage. And now look, it's come the whole way down. At this present moment in time, you'd be 1.7% up. And the question is do we expect the dollar to continue dropping? And do we continue to expect gold to continue getting weaker? That's the two questions we sort of have to ask ourselves. Now, I'm looking for a pullback into this area. And if we get a pullback into this area, this could be another nice little short. And this is the level that we're looking at. So 1 bounce, 2, 3, 4. I'll actually draw them in there because it's actually really clear. So 1. Now this isn't not quite bouncing, but it's close as we're going to get. So there's 2, 3, 4, 5, 6, 7, 8, 9. You could actually say 10 and even 11 there. So that seems to be a level that rejects. That 1758 level seems to be a level that every time it hits, it rejects it. So what we have to do is make sure that if it comes back to that level, that we're ready. Now, can we guarantee that that's going to turn there? Absolutely not. But what we can do is we can be ready if it gives us a decent setup. And if we get that decent setup, then we trade accordingly. So we make sure that we've done the correct things. So people tell me, oh, Henry, you get quite lucky with trading. Luck has absolutely nothing to do with it. If you fail to prepare to fail. And at this particular point, we're looking for it to come back to there. And if it comes back to there, we'll take this trade. And you'd be surprised how often it comes back to that area and hits that ceiling. Now, it could be on the 4-hour or it could be on the daily. I would probably expect it on this one to be on the daily, but it could happen on the 4-hour and completely reject it. And now on to the dollar index. So the dollar index. Now, just to clarify, this is a dollar index. So this is the dollar against the majors. Now, the dollar index is weighted 60% towards euro, because euro is the second biggest currency out there. So that's why it is, or the second most traded currency out there. So that's why it's 60% weighted against the dollar. So we have a double top here. Okay, so what I'm going to do is I'm just going to stick in my stochastic. Just have a quick little look and see how we got divergence. So if we look at this high and this high, so the two of them are identical highs. And if we look at this high and this one, they're also identical highs. So in this particular scenario, there is no divergence. What I want to see there is I want to see this happening. So I want to see that as a double top and then this one here. Now for a reversal, because this would be a reversal trade, I want to see this happening. So it tells me the volume of traders buying this are less than at this point, which would give me an indication that it's potentially going to drop. But we don't see that. We see the same volume of traders buying it at this point as this one. So then I can't guarantee, I say guarantee as I can never guarantee anything, but I won't take this trade because reversals, I have three rules: a horizontal level, and that there is our horizontal level. 2, price action, and we have a really small price action bar, but again, we still have a long time to go in this particular, well, 12 or 15, with 15 or 16 hours still to go on this particular one. So it's not something that I would take now. But if this happened today, finished today like this, there is a potential cheeky short on this. But because I don't have divergence, it's not a trade for me. And I would be looking to be out of it before that sort of this high. And that would be a 2.17 to 1 if we were looking to take that trade. But for me, it's not a trade because I do not have divergence. I need price action, I need horizontal, and I need divergence. We only have 2 of the 3, so this is not a trade for me. But again, some people will take this. Some people don't need divergence. That's not their rules. They have different rules. And if you have different rules, it could be the stochastic or the MACD might give you divergence there. The RSI might give you divergence. There may be a volume indicator that tells you anything. So again, it comes down to you, how your rules are. And if this meets the rules, you take it. If it doesn't, then you don't. Make sure you like and subscribe to this channel. This is instead of doing the 1 at 1 o'clock, this will go live at 1 o'clock for you guys. Look, thank you very much for jumping on board. Don't be afraid to leave questions in the chat box down below, or you're more than welcome to jump onto my Discord. It's henryward.trading is my Discord, or henry-ward.co.uk is my website and my Discord as well. So look, thanks very much, everyone. Hope you all have a lovely evening, and I will speak to you all next week.